What's up, everyone? How are you doing? How are you doing? So, new day, new live stream. See if we get any sort of volatility on the chart because, what a boring morning. Price went sideways, has done absolutely nothing. And what you see on the chart are the CVD divergences in this range. So green, the bullish CVD, and red, the bearish one. And the dotted line is when the bullish CVDs play out. There's only one CVD really left, this one over here, that hasn't played out, the one in the middle. And of course the bigger one here as well, at least one to keep in mind. So yeah, what a day, but let's see what we get. Jeroen, welcome. Hello Crypto, good morning. Ali, hope all is well. Yeah, doing good. Had a busy day yesterday, of course. This morning, a bit more relaxed. Like, tell me guys, so for the ones that have seen the morning update with the line chart, what did you think of the line chart on the high time frame? When I woke up and I sat behind the chart, I switched it to line and I was like, yeah, I'm gonna do a line analysis this morning. So I had to redo everything. So it took me a while, of course, to get all the measurements and also a bit more detailed with the fib times, and the measurements are different when you use a line chart compared to when you use a candlestick chart with the wicks. So because of that, you have to do all the measurements again. So it took me a while to actually make that video because the preparation took a long time. Putting the different scenarios on the chart and also making sure it's very clean, very neat, very organized. But I gotta say, I think the design of the line chart on the weekly and daily time frame is probably one of the best designs I have personally ever made on the chart. I was very happy with how the charts were looking, and yeah, but nonetheless, that's, once in a while, it's fun to look at the weekly. Of course, the candlestick chart is the foundation because wicks do matter. Because if you would, for example, turn on the line chart on the 15 here, keep an eye on what's happening here. Right? This high, the one on the left, is a higher high. Toggle it to line. Now the one on the right is the highest high, right? So there's definitely a difference between using line and using candlesticks. And on a weekly time frame, it's okay. You can use it on the higher time frames. It reduces a lot of the noise and it's perfectly fine. But on a more local time frame, these small little things matter. On a weekly time frame, you have so much time before things actually play out. It doesn't really matter too much. But on a 15, where everything changes, in less than a day, very quickly, it's probably, it's better to use the candlestick chart. Yeah. Siu, welcome. Bettina, what's up? Look very nice, so clean. Yeah, I was very happy with the result. Yeah, it's of course the candlesticks are the basis, but sometimes once in a while the line chart reduces a lot of the noise, and that's very nice. But locally, yeah, it's not really great. But also, of course, on the weekly, I will at least keep these scenarios in my folders just because it looks so neat. It's so nice. But yeah, good to have you here. What we're gonna do today is Elliott waves, of course, on the different time frames. I will go over the line chart on the weekly and daily again because we are live now, so I can explain a few things in a little bit more detail because the line chart is different than a candlestick chart, which means some things are a little bit different. So I think in the video this morning, I just explained the scenarios as they are. But now in a live stream, I can explain in a little bit more detail how certain things on the line chart work. So I think that's quite interesting. And then locally here, we observe. So we have, of course, the bullish CVD divergences, as well as the bearish one, which is not yet invalidated. You got to move above this high here. And yeah, the scenarios locally hasn't really changed. You're either counting this now as a 1, 2, and you look for a 3 to the downside, or WXY corrective structure and a bigger move up. There's scenarios. You have an 886 touch here at the low, by the way. This one is an 886 taken from the low to the high. So touch the 886. It does increase probabilities for an A, B, C to the upside, so a wave C or a wave Y, which in turn does increase probabilities of a corrective structure to the upside and not an impulsive structure, which therefore increases probabilities to sooner or later still take these lows here. But it doesn't mean you go down straight. For me, the most interesting resistance still is the box up here, if price once upon a time can make it and get out of this range. And considering resistance to the upside, we don't have too much horizontals to the upside. So if I turn all of my levels on, this wick over here already touched the daily, so I removed it. But we have a point of control at 65.2, value area high at 65.6, and that is kind of like it. Of course, you can take the high range here and get another point of control at 65.8, but you're getting so close to the highs. So yeah, let's wait and see. Locally, it's a bit more interesting to be on a, let's say, 1 hour time frame compared to the 15. Okay, so ready. Hoshi, welcome. Good to have you. It's probably going to be a bit more of a relaxed live stream. We don't have any news today. Actually, the remaining of this week, July 25th, is next week, Thursday, and then we have Friday. So that should be an exciting end of next week. But yeah, that is next week. So Samith, welcome. Good to have you here. It's nice to see you counting a lot and sharing it in the Gold Elliott Ways group together with Flotti, Bettina, and I follow everything in the Gold group. So it's nice to see, of course, an interesting structure locally. Tavanrat, welcome. Your daily point of control sitting in Europe would be different than the point of control of someone sitting in Asia or America. I suppose that is correct, yes, as my day is based on, or my time is based on Amsterdam. No, wait, no, that's incorrect. And the reason is that it should be the same. Because if you go to, depends on your subscription, I suppose, but a 12-hour, 6-hour, or 4-hour chart, I guess everyone can go to the 4-hour. Please pay attention to your hours. When does your day start? If you look at the bottom of my chart, you can see that my trading day starts at 2 a.m., which is not 12. It's not midnight. My trading day starts at 2. So I guess that also for other time zones, it should be probably another time, no, so not 2 a.m., but maybe 10 or whatever, 10 p.m., midnight, 3 p.m., 3 a.m., I mean. Yeah. I have to do it in Dutch. Yeah, I'll try to remember. Look, Hoshi, I guess when there's someone rude coming in, I will not even put any effort in it. I think I'll just immediately do this, bum, go click on hide user from channel, and then be done with it and continue the live stream. I like to have fun, and those type of people don't deserve any of the attention. So yeah, by far, of course, most of the people are here to either learn something or watch or enjoy, and then the few people, very few actually, like it's very rare, but I'll just ban them, or at least they can't write anything anymore. Join us in Sri Lanka. Welcome, Jingle. How you doing, Saraga? Good to have you here. Hodl Crypto, pleasure. Pleasure bieten. I just want to hear you swear in Dutch slang. What do you guys think is the best language to swear in? I think it's French. Do you ever suffer from analysis paralysis? Ah, I got a video for you. The answer is no. But I used to. Yes. So what you want to do is watch this video. So what I'm going to do is put this in the chat. This video, Anthony, answers your question on what to do. So here I explain, you can see this, you can see how full the chart is here. I'm not kidding. This was all of my folders opened back in the day. You can barely see it on the small screen. Maybe just click on it 1 second here before we go into the analysis. So this video, I explain why having target boxes is so important for your trading instead of ads. Can we just... Toyota. Toyota Formula One car, imagine. Come on now. There we go. Thank you. So this is not a joke. Everything you see on the chart, back in the day, right? If I opened all of my folders, everything, then this was my chart. Everything. I mean, how are you going to trade this? No. So in a few very simple steps, I explain why this works much better than this. Now, of course, you're like, duh, makes sense. But how do you clean up a chart and how do you find these areas of interest? And that is what I then show you. So step 1, step 2, step 3, step 4, step 5, and eventually step 6. So I explain to you step by step what to do to make these target boxes. And for me, it is by far the easiest way to trade. In my opinion, less is more. It's very clean. So I really recommend having something like this on your chart. John, what's up? How are you doing? Welcome, welcome. Can't see the woods for the trees. I know the Dutch saying. Kan door de bomen het bos niet meer zien. That's what we say in the Netherlands. Nice. Okay, so let's get this started. Okay. So we will go to the 1 hour time frame max. I'm not really interested in counting the 15-minute. Let me organize my folder here. Of course, we're still looking for the same thing. Oh yeah, I'll cover the line chart in this live stream as well. Usually, for example, America only wakes up now, so they likely haven't seen that video. And in a live stream, I can explain a little bit more. Are we gonna really? We're gonna go over this. The 886. I guess we can just have a look and probably change, remove scenarios and all that stuff. So the low time frame stuff will be a little bit of like live analysis where I will remove and add some things. The higher time frames are very clear. The 1 hour as well at the moment, but the 15 here, this move down and this range is not too exciting, not too interesting. Just waiting for a breakout of this forever range here that we have been in this morning. Jeez. Like, can we get out of there? Please? Okay. So, let us switch for a second to a line chart. So what we're going to do is, I made the video this morning, which was all about analysis on the line chart, but I didn't explain everything that I think is relevant on a line chart. I try to explain as much as I can in a condensed amount of time because I don't want the videos to be too long, you know. But it did take me a long time to do the analysis on the line chart. And here I want to run you through, for the Americans probably the first time you're going to watch this. For others, it might be the second time you see this analysis, but in a live stream I can explain more compared to a video. So there's always new information in the live in the live stream. Yeah. Welcome Boris. Good to have you here. Hamid Reza. ECB talking now. I don't know what the ECB is, but is that like news related? Wisdom right here. Skip the 6 steps to get target boxes and just watch these videos. Yeah, you can you can also indeed just watch the live stuff. Yeah. Antioch, welcome. Lawson Storm, waking up early from Arizona. Wow, you're here already. Die hard. Broadband, European Central Bank. Okay, I see. Leva, welcome. Thanks, guys. I had no idea. Okay, so the European Central Bank is speaking, someone said. Interesting. Okay, we'll see if it does anything. Hopefully, we break out of this range at some time because like we have been here the whole day. Nothing changes. The beginning of the day, big move up, big move down. That's it. Like spike up, spike down. It's not even a big move. Spike up, spike down, horizontal range forever. A bearish CVD, a bullish CVD. It's like such a neutral playing field in a way, no? Very ABC wavy structure to the upside, right? If we want to count this impulsively, we would need an impulse diagonal or a double 1-2. Impulse doesn't work. Double 1-2. I mean, then this is your second 2. Still has some validity at least in a way, and then diagonal is too early. So yeah, and then other than that, you go into corrective structures, WXY, right? Yeah, okay, that's something for later. Why the lines instead of the candles? That's a good question. The reason, so I have candlestick analysis, and this morning I also did line chart analysis. So FYI, right? For the same scenario, right? This is the analysis on a candlestick chart. Yeah. And this is your analysis on a line chart. Now, what you'll notice is some of the levels are a little bit different because the line chart is, of course, a different chart and it doesn't have the wicks. Now, the reason to sometimes, especially on higher time frames, generally on the lower time frames, you just stick with candlesticks. But on a high time frame, it sometimes really helps to use a line chart to block out the noise and all of the colors and make it very, very neutral. And you will pull the fibs from the same pivots, but your targets are going to be a little bit different. And the line chart is very interesting on higher time frames as mentioned, and yeah, it just blocks out the noise. It's very clean, which can help some people with psychology as well. So not yet, Ephraim, not yet. There will be an update probably tomorrow. I don't like the candle count 3 of 3. Which one do you mean, John? 1, 2, 3 of 3, or you mean 1, 2, 1, 2, 3? Yeah, this 3 is very short, which I would agree if this is the 3 of 3, like 1, 2, 1, 2, 3, 4, 5, 4, 5. This middle one, yes, it's a short one. No? Maybe double 1, 2, or just a simple 1, 2, 3, 4, 5. Those two are very interesting. In both cases, you still take the high though. So. Am I right in saying that the plan is just to sit and wait during this boring range until some... pretty much, right? So, of course, with the bullish CVDs, if I zoom out, so I always like chatting before actually going into the analysis, but we have this bullish CVD here, of course, and we started building bullish CVDs locally. We do have a bearish CVD on the 15, even though we almost invalidated it by moving above this pivot here. Twice on the candlestick chart. So yeah, as long as you don't change the market structure, you will look for price to move up. We do have an 886 touch at the low, but this is not a great range to count. Now from a Elliott wave perspective, we will analyze this in a second, right? Some traders invert the charts also to see a different perspective. Exactly. I'm not really big into inverting the chart. I don't like to invert the chart. It messes with my brain, and it doesn't change my analysis. I've tried it a few times. Yeah, I do like sometimes to look at the line chart. Have you heard about the Aladdin that BlackRock uses? If not, could you read about it when you're free? I don't know what Aladdin is. I know Aladdin the character. So, but yeah, I don't know what Aladdin BlackRock is. Never heard about it. So I would need to check this. I know you're probably, but if you had to bet on Bitcoin top, would you say 100 or closer to 150? I mean, look, this is literally that one. There's no, we don't know. You can't. This is purely guesswork. 100 or 150. From an Elliott wave point of view, the target area is 104 to 180k on the monthly at the moment, and locally we don't yet know if this is 1, 2, 3, 4, 5 finished around 100k, or if we have a more bullish scenario, for example 1 to 1, 2, 3, 4, 5, 4, 5 towards maybe 150, or the most bullish 1 to 1 to big S3 to much higher. So I'm very much I'm a trader and also an analyst. I like to take it step by step. I don't like to go absolutely moon boy. I also don't like to be absolutely like dramatizing. Step by step. Step 1 is take the high, and then we'll take it from there. That is most important, right? No one knows if we go 100, 150, 500k, but we will know once we get structures. Because once we get a new range at a higher price level, we can analyze that range and have the correct probabilities for continuation up or the end of a bull market. So for now, the probabilities are higher to move up until we then have a next range, and then we'll take it from there. So I'm not really in, like, a little bit what John says, but in I don't really do too long-term predictions. I'm very much, of course we have the weekly and we know the probabilities on the weekly, but I don't try to have an exact target for the top. It's a big range, 104 to 180 at the moment based on the current information. Okay, I think we should start, no? So let's get this going. Again, we're going to do a little bit of line chart, and once we go to the 1 hour time frame, we're going to use the candlesticks, okay? But I do want to say a little bit more about the line chart compared to what I could do this morning. Because the line chart is a little different compared to the candlesticks, and you can see the difference, right? The line chart is very clean, very neat, very calm actually, which is also why I like it. But the pivots are different as well. So the highs and the lows that you select for certain Fibonacci pools are different because you don't have the wicks, right? So that is something you have to keep in mind. Look at the wick over here, for example, right? I'll put a horizontal line on the chart and now go to the line chart. Wick is gone, no? So it immediately changes your chart. However, the line chart on the higher time frames can be very valuable. And it's a really nice way of doing analysis because it is so neat, because it is so calm, because you don't have the wicks. So let's go over the line chart. And also, if you actually go to the Elliott Wave book, Frost and Prechter, Elliott Wave Principle, you will notice that they also regularly use line charts on very high time frames, right? So definitely interesting. Let's start and then I'll get back to the questions, okay? So, cool. Number 1, This is your most simplistic bullish scenario. 1, 2, 3, 4, a 5-wave structure. Your wave 2 in this scenario with the line chart retraced to the 236. In a candlestick chart, price retraced to the 382 when at least you put the 382 on non-log, right? Did I do that here as well? No, this one is log. So a 236 retracement for 2, which is a shallow retracement. Then we have wave 3 touching the 1.618 perfectly, taken from the low to the high of 1 to the low of 2. Now keep in mind, just like with the example I gave a few minutes ago, right? The wick is gone, no? The wick that we have here. So it's interesting. We hit the 1.618 pretty much to the T on the line chart as well. Retracement down in 4, 2, 3, 6, common target. And then we have wave 5. Now time-wise, this wave 2 was on a line chart exactly the same amount of time as your wave 1. The low was in on the 1-to-1 fib time, taken from the low to the high of 1, right? And then you double click here. Then we have wave 4. We compare wave 4 in time to wave 2. And currently the low on the chart was made just after the 0.618, taken from the start to the end of 2 to the end of 3 fib time, which is fine for a wave 4. Most commonly a wave 4 ends after the 1-to-1 though, as a wave 4 typically is longer than wave 2. But because wave 2 here was a very sideways shallow corrective structure, a wave 4 does have a little bit higher probabilities to be a sharper structure, and sharper structures generally are a bit shorter in time. So this is something we have to keep in mind. At least wave 4 ended after the 0.382 fib time, which is what we like to see. Now, if you want statistics, if wave 2 is sideways, wave 4 still has a 78% probability of being sideways as well, and a 22% probability of being sharp. Gotta love data. Now the 236 is a common target for 4, and then of course in your most bullish scenario you look for an impulse up, 1, 2, 3, 4, 5. Now if the low of your 4 here is in and we look for a wave 5 up, then your wave 3 is extended, and therefore, rule of alternation as well, wave 1 and wave 5, because wave 3 is extended, tend to move towards equality. So you have your wave 1 not extended, 3 extended, and then 5 mimics wave 1 in time and price, commonly. In price, that would give you a price target of 104K, and in time, it would give you a time target between the 25th of November and the 24th of February to make an all-time high on the chart at around 100K. No? Of course, the most, or more, not most, bullish scenario is a double 1-2, 1-2, 1-2, 3, 4, 5, 4, 5. Now, like John mentioned, which I think, John, you mentioned this one, this wave 3 is very short. If you have a double 1-2, 1-2, 1-2, and then a 3, preferably this 3 is very extended. That is your 3 of 3. That should usually, most commonly, be your biggest push, your highest volume, your most extended wave, your rocket, right? But this one is very underwhelming. It's very short. Huh? It's similar in price compared to wave 1. It's just a little bit longer. Take a trend-based fib from the low to the high of 1 to the end of your 2, and you can see that wave 3 just moved above the 1-to-1. Now this does open the door for an extended fifth wave, which means wave 5 is going to be the longest, strongest, and most impulsive wave. However, it never gets the highest probabilities, as an extended wave 5 is not common, right? Now on the chart, what you see is the wave 4 target area, 382.05, taken from the low to the high, has been hit, of wave 3 by the way, low of to the high of wave 3, and your invalidation is 51K. Now that is interesting, because if you remember on a candlestick chart, the invalidation for this scenario is 49.3K. There's a difference, and that's because of the wicks as well. right? And then preferably this low is in and you move impulsively towards the upside. This wave 5 is then compared to your wave 1. Again, wave 5 does have probabilities to extend, but if wave 5 is similar to wave 1, then you would like to see it end between the 1 and the 1.618 preferably, which is the 30th of September and 25th of November. Move down in 4, another impulse up in 5. Now this scenario does look a little bit less nice compared to this one here. And your most bullish scenario is a double 1, 2, which I only have on the candlestick chart. 1, 2, 1, 2, and then look for a very big wave 3. So yeah, bullish scenarios, number 1 and number 2. In both cases, you're taking the high. The bearish scenarios have a lower probability. So there you go, you already know this. But I still want to talk about 2 bearish scenarios. The first one is a bigger flat ABC with inside B a finished zigzag hitting the 1.618 common target for C, taken from the low to the high of A to the low of B. Perfectly respected. However, the moment you do hit a 1.618, it is a target for wave C, but the probabilities are higher for a 3 compared to C, as wave C most commonly in a zigzag structure mimics wave A, so the most common target for C is the 1 to the 1.236. The moment you hit a 1.618, you got to think wave 3 compared to C, right? Unless we significantly move to the downside. Now here we have a regular flat. Your target is below 15K. The 0.9 to the 105 is the common target area for a regular flat, taken from the high to the low of A, which is where we are ranging now. And in this scenario, you are going to be looking for a very bearish impulsive move to the downside. More about that in a second. The other bearish scenario, less dramatic, but still bearish. Also, again, lower probabilities than the bullish scenarios, to make that clear, is a sideways double combo. Now, generally, you want to stick with simple structures like a zigzag ABC or flat structures or triangles compared to WXYs, right? They're never really your first pick, but here we have one. So we then have a flat in your W, zigzag in your X, and you look for a wave Y to the downside. Your wave W here as a flat is not that great because of your wave C. Now, I have seen a flat here, ABC, online back in the day when we weren't up here, but I do remember people talking about a flat here when we started moving to the upside. And I never really feel great about counting this a flat, because in a flat structure ABC, your wave C is most commonly your scary move, very quick, very fast, very scary, very impulsive, right? Very fast, boom, and then return. And this one is very slow, very long, very controlled, right? It is at least shorter than your wave 2, so that's something. But just like Prechter said in an interview, which you can find on YouTube as well, where he analyzed this section on the chart, to repeat his words, he said pretty much just what I said now, is a wave C is commonly fast and sharp, and this is very slow. He would not count this as a wave C of a flat. He would count this differently. No? I would only agree. So then we have a zigzag in X and then wave Y. Now wave Y can be a zigzag, triangle, or a flat. Minimum target is the 618 at 31.6K, taken from the start to the end of W to the end of X. And because of the rule of alternation, preferably wave Y is a zigzag or a triangle. The rule of alternation in a corrective structure increases probabilities that a W and a Y are two different structures and not similar structures. Now, a zigzag does have some higher probabilities compared to a triangle in a wave Y, and it is in nice confluence with the wave B range as well. So hey, that's interesting nonetheless. Okay, cool. We go to the daily time frame. So on the weekly time frame, the probabilities are higher for the bulls. In other words, another all-time high. There's no reason to think at the moment that the bearish scenario has a higher probability. We hit the 1.618 on the weekly. We are ranging here. On a candlestick chart, we hit the 886 here, also adds probability to continuation. We haven't lost any significant levels. We never got a deep retracement to the downside, moving or even invalidating bullish scenarios. We are in a uptrend on the weekly time frame. There's like nothing that would say, oh, the highest probability is the bearish scenario. Now, of course, in the future, things may change, but then we either lose significant levels, have high volume moves to the, stuff needs to happen. So yeah, and also change always appears on the lower time frame first. So the probabilities on the lowest time frame change first and then slowly move up. So you first have bearish probabilities on a 15 and then a 1 hour and then a 4 hour and then a daily, then the weekly. But you need a lot needs to happen before even thinking bearish in the current market that we're in. On the daily time frame, your bullish scenario is a finished zigzag structure, A, B, C to the downside, leading diagonal in wave A. This is where the line chart can also be interesting. You take a trend-based fib from the start to the low of 1 to the high of your 2, right? Because you're counting a leading diagonal 1, 2, 3, 4, 5. And you can see that the chart did not hit the 1-to-1. On the candlestick chart, you did hit the 1-to-1. It's interesting, right? So sometimes it also helps to put on the line chart, because on the candlestick chart you just wigged the 1-to-1, but on the line chart you actually didn't hit it, right? So interesting. Then we have our wave B and our wave C to the downside. Now I gotta say that your wave C to the downside here, interestingly for me, looks better on a line chart than on a candlestick chart. The candlestick chart is so messy, this move to the downside, right? So much wicks and overlap and all of that stuff. And actually here it looks pretty neat. 1, 2, 3, 4, 5, 2, 3, 4, 5. Okay, no problem. There you go. Finished, right? So much cleaner on a line chart. Whatever the overlap here, of course, we don't see that because we don't see the wicks. If you go to a candlestick chart, you're going to probably count diagonals in here. It's just that on a line chart, it looks very clean, right? So it's just nice. It's nice to see. What's interesting is that your wave 4 here did not touch the 0.618 taken from the start to the end of your wave 3. So it's not invalidated. And your wave 4 ended between the 3 and the 4 fib time. Fib time taken from the start to the end of 2 to the end of 3, which is perfectly fine for a wave 4. And then we have wave 5 down here, hitting the target area for your wave C between the 1 and the 1.236. Well, so that's perfectly fine. Now in this scenario, we then look for a move towards the upside impulsively. If this is the end and we look for bullish continuation, we want to see 1, 2, 3, 4, 5. Preferably here, we're looking for a wave 3 to be in. You can see we got a drop. We start to range sideways. So it would be nice to start thinking about a wave 4, which has been in my probabilities in the past couple of videos, right? Like on the 1 hour, highest probabilities that we start looking for a wave 4 to form. And your common target area on the line chart is between the 236 and the 05, from the low to the high of 3, 63.2 to 61.2. Invalidation, 60.3K. Now the target with regards to time for this wave 4 is between the 1 and the 6 fib time, taken from the start to the end of 2 to the end of 3, giving you a time target of today, the 18th, till the 28th of July. In other words, preferably before the end of the month, we make a low for 4 and start moving for a wave 5. So that in August, we can probably end the wave 5 and maybe end August, September, right? We can get a bit of a downtrend and correct this impulse to the upside. And then in, let's see, September, October, move towards the downside, maybe November. And then by the time the new year hits, November, December, we can grind in a few 1-2s, and then you want to continue to the upside in the new year. Time-wise, makes sense. Okay. Your bearish scenario is a double 1-2, same diagonal, labeled a wave 1 now, wave 2, and another 1-2. Wave 2 retraced very high, but on a line chart, we actually just missed out on hitting the 886. And you'll see if I zoom in, got to zoom in quite a bit. It's by a few dollars. So the high here, 71.432, and the 886 is 71.440. But it didn't touch. But nonetheless, it is a very, very, very deep retracement for a wave 2, which does lower the probabilities of a wave 2. Side note, something you'll learn in the theory is after a diagonal, the probabilities do increase for deep retracements, but nonetheless, for a wave 2, the most common target is the 786 to the 05, not the 886. Then we have another one, 2, impulsive 3. Common target for 2, 05, 786, 63.4, 67.8K, taken from the high to the low of 1, 886 is a rare target. You don't want to hit it if you're bearish. Wave 2 has to be a 3-wave corrective structure. Of course, there's the potential for a zigzag, but we extend it to the 1.618, increases probabilities for an impulse compared to an ABC locally. If we do get an impulse, 1, 2, 3, 4, 5, we need at least a 3-wave correction and another impulse to create an ABC in 2 and then move down. Time-wise, we preferably end between the 382 and the 1-to-1 fib time, taken from the start to the end of 1, 19th of July, 8th of August. As you can see, we haven't hit the 19th of July yet because that's tomorrow. No? So there you go. That is the analysis on the line chart. Very, very interesting. I gotta say, I do like the line chart on the weekly time frame. Now, the line chart analysis was not requested, but this morning when I woke up and I sat behind the chart, I was like, I always start on the high time frames. And I was on the weekly time frame and I was like, you know what? Let's switch to the line chart. And I saw the line chart here, and in my head I started to count, and I was like, yeah, it looks pretty nice. And I love the blue with my background. So I was, I'm gonna make some nice designs for you and analyze the line chart on the high time frame. I gotta say, it looks really clean on a line chart. It is it's beautiful. It's very artistic. I love doing analysis on a line chart on the higher time frame. On the lower time frames, I don't really like to use the line chart. We took the high here. Okay, so that happened while we were analyzing. We swing failure the high pretty much, wicked it, immediately moved to the downside. So the local bullish CVDs have now played out. Very, very nice. So on the 1 hour time frame, nothing really changed. And again, we're gonna zoom into this little bit here for a second. But before we do, on the 1 hour, we're still looking for wave 4 to form at some point, right? If you end wave 3 here, then this is your 4 target area, 63.8, 61.3. It's a very awkward structure to end a wave 3, has to be said. We had some discussions about this move to the upside in the Gold Membership Elliott wave channel here as well, because it is definitely not an impulsive structure because of the overlap, but it's also not a great diagonal structure because it's then expanding, which of course is rare. So definitely not ideal. And therefore, 1, 2, 3. And maybe we already started wave 4 here, right? A, B. If you're looking for an impulse down for wave C, again, it should usually be very quick, very scary, right? Very fast. You want to see 1, 2, 3, 4, 5. So another scenario, A, B, C, D, E, is a running triangle where you continue this range sideways. But I don't really like to talk about triangles too early. So yeah, A, B, C, D, E. Not take the low, get some bullish CVDs, take the high again. We might start talking about triangles then. So then you're going to have something like this, no? A, B, C, yeah, like that. But you did hit the target area for a wave 4. And that's simply what we're looking for. We're looking for a wave 4 to form. a wave 4 can be very complex, can be any corrective structure, can be a zigzag, can be a flat, can be a WXY, can be a triangle. And of course, all of these have separate structures: simple zigzag, double zigzag, triple zigzag, flat, running flat, expanding flat, and regular flat, running triangle, expanding triangle, barrier triangle, contracting triangle. And then you have WXY, sideways double combos. So in all of the bullish scenarios, you're still looking for a wave 5 to the upside. So you're still looking for at least one more push, and you got to give wave 4s time, right? Waiting for a range to form. It never really makes a lot of sense to try and move into a wave 4 too quickly, like, oh, it's going to be this or that. I'm always very patient with wave 4s, but one of the scenarios I had in mind was a flat when price moved up here, right? And especially once we took this high. But then you want to see a wave C down, a quick one, to move below A. And one has to say that we have been ranging here for quite a while now. If we take a fib time from the start of A to the end of B. Oh, I misclicked. Oh, wait, I don't have those are brushes. From the start of A to the end of B. We got to move down really quick in that case, because you don't want wave C. Yeah, it doesn't make sense. No, so a flat doesn't make sense because you need a 1, 2, 3, 4, 5 for an expanding flat to finish below A. But look how little time is left. So if we are talking about flats, then this should be the end of your wave C. And then you have a running flat, but a running flat is very rare and therefore never preferred. So we can remove this. This is some old folder, so I also have to see what's up. Second scenario here, that is an impulse. So we have our 1, 2, 3 resistance at the 0.5 Fibonacci. Still expect to move towards the downside below the low of your wave 1. Right? Invalidation is clear. Bearish scenario finished ABC, but preferably this is your end and you move down impulsively in a also a 1, 2, 3. So again, 1, 2, and then a big wave 3 to the downside. I don't really like to count the 15-minute at the moment. What we can count though is this. If this move to the upside is bullish, we want to count one of 3 structures, and that is impulse, diagonal, double 1, 2. So we have a low. Can we count an impulse? 1, 2, 3, 4. No, right? No overlap allowed between a wave 1 and 4. Lots of overlap going on here, so that doesn't work. Diagonal, then we need something like this. Now let me take a channel here. Where is it? From this to that to this. We hit the channel low, meaning a contracting diagonal is not possible. Only an expanding diagonal. Expanding diagonal is rare, never preferred unless all of the other structures fail. And then we have a double 1, 2, 1, 2, 1, sideways 2. We want to see a big wave 3 to the upside. Invalidated if we start to take the lows of the range. And we want to see strong continuation. And also your second wave 2 is, I think, longer than your first. Yes. 1, 2, 1. Yeah, so it's longer than your first wave 2. And preferably in a double 1, 2, your next wave 1 and 2 are a little bit shorter in time and price. Also, we have hit the 886 here. And the 886 is rare for 2, common for a wave B or X. Does increase probabilities for corrective structures to the upside, not impulsive structures, which does increase probabilities to eventually take the low. So, of course, price never has to go down in a straight line, yeah? But sooner or later, probabilities would be higher for price to take out that low. So, and that's pretty much it. Oh yeah, final thing, because I keep looking at this because I'm really interested. Is let's go to the line chart because it looks better. This volume profile of the range, the value area low, in confluence with the bigger support resistance area. But this point of control, it's like a magnet. I just want to see what happens if it gets hit. 66.9k moving back inside the volume profile of this range. I mean, it's looming, right? It's there. It's like, it's waiting to be touched. But we haven't yet. 66.9k. Yeah, I'm very interested in that level to observe what happens here. But gotta be patient. Actually interesting, on the AGGR chart, we didn't take out the high, did we? Nope. So yeah, this is area of interest to the upside, right? Area of resistance. So yeah, the probabilities, of course, are quite simplistic. Weekly, daily, bullish, 1 hour bullish at the moment, unless we start to lose some significant levels, which we haven't done. We are on the 1 hour looking for a range to form in a wave 4, and then we take it from there. And again, a wave 4 can be any corrective structure. And yeah, I'm very interested in the point of control to the upside, which is this blue box. The blue box here above us, that's the box of the point of control. So yeah. Okay. Voila. 1 second, John. I'll make sure to read your messages. Just writing the time. Okay, there we go. Very nice. Okay, let's see what happened here. Holy moly. We were Are there ways to distinguish between a bearish ABC and a bearish 1-2-1-2? Yes, the second two. Okay, more complex. Most commonly, if you have a 1-2-1-2, your wave 2s are a similar structure, right? So the moment, wait, so there's two things to look for. First of all, impulsive / corrective. So you have an ABC, or you're looking at a double 1-2, right? 1-2, 1-2. Oh, that's too big. 1-2, 1-2. Okay. First of all, after wave C, if that is a finished zigzag, you want to have an impulsive structure to the upside, a 5-wave move, right? In a double 1-2, each move up is corrective, not impulsive. Zigzag, flat, WXY, triangle not allowed in a wave 2. So anything but a triangle, but it should be 3-wavy and corrective. Preferably in a double 1-2, you also have overlap between your wave, your first one and your second two, ideally, to create a bit of a diagonal structure, but that is a perfect case, I suppose. Second, your wave C is typically the same size as your wave A, but in a double 1-2, preferably your second one and second two are a little bit shorter in price and time, right? It's all probabilities. So you have, after ABC, impulse up, and these are corrective. And you have the extension. Wave C similar to A. The next 1-2 preferably a little bit shorter in time and price than the first 1-2. In 1-2s, we preferably have overlap. In an ABC, you of course want to move down far, right? Far down. So, yeah. And most commonly is in a double 1-2, your wave 2s are the same structure. The moment you see like a potential 1-2-1-2 and both wave 2s have the same structure, then yeah, keep an eye on a double 1-2. Yeah. JP, welcome, or GP. Yeah, JP, that's like Dutch. Yeah, the line chart is very clean. I really like a line chart. Reading. Also, something that's also a thing is that on a weekly time frame or higher, it is most common, it is more common, not most common, but it is more common for a wave 5 to have the highest volume, which causes the blow-off tops. Below the weekly time frame, wave 3 commonly has the highest volume. Of course, also on a weekly, but 5 has a higher probability of getting the highest volume. Elliott himself did line chart, yeah. Yeah, diagonals love deep retracements. What is a red candle? Cheers, John. Michael Medina, welcome. After we hit, if we pivot. After we hit, what do you mean, John? If you break out to the upside? Does the price action look like it too? Cheers, Yanis. Is there any reason to invalidate the scenario that's possible we finished a high degree 1 in March and are since then in a higher degree 2? Oh, so relax, bro. In that case, you're talking about a double 1-2. Let me have a look here. Yeah, so to invalidate the scenario, oh, is there any reason to invalidate the scenario that it's possible we finished a higher degree 1 in March and are in a higher degree 2? There's no invalidation for that scenario. That is your double 1-2 scenario, which is of course your most bullish one. That's this one here, right? There's no invalidation for this, but of course you do have two structures that are different in this case. In a double 1-2 preferably they're the same, but again there's no invalidation. You do have this wave 2 being quite sideways in price. It has alternated in structure, right? Flat zigzag for that matter. If we are looking at a wave 4, 1, 2, 3, 4, 5, preferably wave 4 retraces to the wave 4 of a lower degree, which it hasn't done. So that is something that would benefit the double 1-2, but there's no invalidation for this scenario. And what John says, the invalidation, as you can see on my chart as well, is all the way down here. It's very unlikely. I mean, before we go down here, we will be talking about bearish scenarios. So there's no invalidation for this. So on a weekly time frame, the probabilities are higher for the bulls, right? Whatever forms here, of course, we have a potential finish zigzag ABC. But it's all about taking the high. If you take this high, what's next, right? Probabilities on the weekly are at the moment still higher for upside, but then what? Do you get indeed like, for example, double 1-2 and a very big 3? Well, in that case, we want to see explosive price action, high amount of volume. Do you have a 1, 2, 3, 4, 5? Well, then we want to start ranging, get a bigger rejection, retracement, The first move down should be impulsive. The second move up should be corrective. And then we're going to look for another move down. Or do you have 1, 2, 1, 2, 3, 4, 5? Look for a 4, meaning corrective structures to the downside. And then another 5. And then, wait and see. No? It's step by step. And step 1 is take the highs and take it from there. So, no. It is quite interesting. We have started ranging quite early. Look at the all-time high here, right? We had a little bit of a range, very short, and then poof, range, all-time high, bigger move down. But you can see that here we moved up a lot more impulsive compared to what we are doing at the moment, which is quite interesting, has to be said. Of course, you had your leg up, 3-wave down, and then here you started with the rest. But the moment you broke all-time high here, you were flying. And now we break all-time high and and we go sideways, like nothing happens. What's this? What's this? Let's see what happened here. Yeah, so here you did take the all-time high, and you had this is the weekly time frame, so 3 weeks of downside, short rejection, moved up again, retest old all-time high, and the moment you broke it, you never look back. So that was quite a short range. I mean, and here we didn't even range. Here you just took the high and you continued. Of course, you have a range here, but perspective-wise, we are now at 60K ranging here. So here you push towards the upside and only formed a range later. Here we had a short range, 3 weeks downside, and then 3 weeks back up. So that's 6 weeks in total. And here, the moment we passed all-time high, we had, let's say, a 1 week rejection, and then you moved. And now it's just, we took all-time high and we go sideways for months. Interesting. Wizard, how you doing, bro? What's up? Thanks for the support, man. Welcome back again. Oh, by the way, let me put the timestamps off here. Boop. So clean, more clean. If we hit that point of control of the range, a validation is taking the low of the first two. Yeah. Relax, bro. Pleasure. Hunter, welcome. Also, Hunter, thanks for all your comments. Appreciate it. Of course, I reply all the time when I see your comment, to anyone really. I try to reply to every comment I get. I gotta say, I can still do it. It's not too challenging yet, not like too many comments, but I can definitely feel the channel grows on the comment side, because sometimes I'm like doing a few things, I come back and there's like 5 new comments, and 5 is not much, but of course I've already been commenting, so I try to keep it up. It's I only have 2 notifications on my phones. One, if my wife sends me a WhatsApp message, I get a notification. She's the only one on WhatsApp. The rest is turned off. 2, YouTube comments. If someone comments, I get a notification, because I want to reply to you. You know, you put effort and time into writing a comment. I want to put effort and time in replying, and I'll try to continue that as long as I can. Yeah, ETF should trigger sell of it first. Problem is if the ETF is a flop. Hey, the Ethereum ETF, was that what, 22nd or 23rd, like next week? No, a stock market dip should also create a bit of a dip on Bitcoin. Yeah. Of course, there's also other bearish scenarios I haven't covered in this live stream, which are not as bearish. It's just continuation of the range. So, of course, your most bullish is a finished ABC. But you still have the potential of WXY, but that's not great. I prefer a longer structure. But if this happens and you go sideways for another few months, you're really starting to increase probabilities of this being a wave 4 on the weekly. What can we expect to happen along Ethereum ETF coming day? Is there another dip like before Bitcoin ETF? Well, when the Bitcoin ETF hit, which was here, what we were looking for, so we were in this range for quite a while with bullish CVDs as well. And you can go back. We actually went live. We went live during the Bitcoin ETF. And what we were looking for, I had a resistance box here. What we were looking for is a spike to the upside to fake out new buyers, greed, typical buy the news or buy the rumor, sell the news. We got a solid move up. Quite a spike. I mean, maybe I would have liked it a little bit bigger, but it was good. And then we moved to the downside, which is exactly what we like to see, because it immediately hurts everyone that bought the high with the news, which is perfect. So everyone gets stopped out, market structure change, people bearish, and off you go. So, but the conditions were different. The range was different. With regards to the ETF on ETH, yeah, we will surely have some volatility, but does it lead to a new low immediately? I mean, the only way I would see an immediate new low would be 12123, or you go for WX and then your Y is a zigzag. But in all of the other scenarios, you would expect sideways price action, right? 1, 2, 3, 4, 5. Correction. So just continue sideways with an impulse up. Why am I, by the way, still on index? Let me go to my chart. Yeah. So at the moment with the ETH ETF, I think on the day itself might be typical like Bitcoin. So the moment the news hits, nothing really happens, and then the next day is where it kicks off. What I would like to see, this would be interesting, is ETH ETF news hits. Maybe on the day itself doesn't do too much, but the next day hit the point of control and get a sharp move down. B, C in a bigger 4, and then move up in 5. Psychologically, with the news, people buy, get wrecked. Very nice. People get scared. Oh shit, we go down, everything goes down. Then move up in 5. Oh, you see, right? ETF, yes, new all-time highs. Create a lower high. People bait it, get wrecked once again, retrace to the CME gap. Interesting, in confluence with the golden pocket. And then move up. From a psychology point of view, I definitely see something. Yeah. Very interesting. Go back down. Yeah. Hiwa, welcome. Probably not enough people are talking about is the most on the dollar index. All gains proof. What do you mean for futures, Hiwa? Yeah, of course, there's never full certainty in trading, but So far, if the move of the lows becomes an A, B, C, that's of course most bearish. If you're preferably really your high of C would be kind of like in, but A, B, C and then move straight down impulsively, that's of course most bearish, but it doesn't have the highest probabilities. You first need to move down significantly still locally. So yeah, an impulse on the 1 hour still has the higher probabilities, but for that to be confirmed, we still want to have our wave 4 sideways range for a little bit longer and then create another high in 5, and then after 5 we can get the retracement down, but after the move down you expect another 5 wave move up. So yeah, Jay, McMagical, double-edged sword, exactly. I never really look at news. The chart gives us all the info, but it is interesting to counter trade. Yeah, yeah, that's what I find most interesting about those type of news-related stories. If most of the retail not very knowledgeable about technical analysis and stuff starts buying into such, yeah, like such news, I mean, yeah, just wreck everyone. Pleasure, Ali. Thanks for being here. Karim, welcome. Hiwa, I want to open a long or short trade. How high will it go? If I would know how high it will go, then I probably would have bought my own island like Mr. Beast does all the time. Meaning, no one knows how high or low it will go, but what you need is a plan or a strategy to trade signs of strength or signs of weakness with a risk-to-reward ratio that is preferably based on data or leads you to support or resistance areas for TPs. You can trade long or short anywhere. Now, my most important resistance to the upside for short term, right, would be this box, 66.6 to 67.1. Right? That's interesting resistance. Also, it depends on the time frame. If you talk about the weekly, price can go to 100k, 150k, 180k, right? On the daily time frame, I would like to see like 68, 69, 70 before reversal. And on the 1 hour time frame, this resistance here is interesting. But then again, you need a plan, you need a strategy to enter a position that gives you confidence. So no one knows how high it will go. No one knows if X will be hit first before Y. It's all probabilities and level by level. So at the moment, we are at this support resistance area. You can clearly see support, resistance, and so far acting as support. It's been here now for a very long period of time. Ooh. Red candle, CVD moving up, in candle bearish CVD. Oh, on the 3 minute it already played out. Never mind. It's interesting, we have a bearish CVD on AGGR because the high didn't get taken, but on my chart it did get taken. So yo, Tortuga, welcome. Welcome. Good to have you here. Pretty much in my closing minutes now. 4 p.m. Central European time. We've been live for 1 hour and 20 minutes. Very nice. Not too much happening on the chart. So yeah, it's not too much going on. Huh? Just sideways complex price action. I'm here now, carry on. Yeah. I know, yeah, I mean, not too much. We covered the analysis, and locally, yeah, Perfect timing as usual. Yeah, it's of course America waking up. I get it. Like you of course I go live in the afternoon, and sometimes it's better for America and sometimes not as great. This time I was a little bit earlier. The 886 doesn't even want to go to the golden pocket. Not sure which 886 you talk about, Dawa. The 886. So I do not take an 886 from this low to the high. Because this is, yeah, it's in a complex range, so there are probabilities for this to be a complex low or a corrective low, and not necessarily a new impulse up for 1, 2, 3. I take an 886 from this one, for example, to here. Or if this was a high and we impulse down, you can take it from the high to the low to check. But this is now just sideways corrective. Blah blah. Yeah. The wick on the AGGR chart. There's no. This wick is on my chart as well. It's this one here. So yeah, it's pretty much the same. Yeah. What we can see, of course, we had some bearish CVDs here. They played out. Bullish CVD, bullish CVD. This one played out. Again, bullish CVD, bearish CVD. But on my chart, this one is invalidated. But on AGGR, we didn't take the highs. So, but then we did touch an 886 down here. 886 adds probabilities to taking the low, counting this impulsively to the upside. It looks very corrective. No. Can we count an impulse? No. Overlap. Double 1, 2. For second wave 2 is longer than your first. That's not ideal. It is diagonal, too early. So it all looks very corrective. Of course, even with corrective structures, you can still, you still have space. But yeah, area of interest would be the point of control area above. And here, I just want to wait for a breakout of some sort. I played hooky today. I will be watching the rewind. If you watch the rewind, you can't write in chat anymore, right? It wicked to 53k. Oh wow. Must be a bug or something. Yeah, Dow only pivot points. And the reason is that a wave Y, for example, or in a triangle, your B, C, D, and E can end at the 886. So the moment you start creating a range and stuff, you don't want to pull an 886. You only want to pull it at significant highs or lows, where you want to look for a new impulse. Interested to short. Yeah, I also have that in mind, but yeah, there's no setup for me here. I'm happy to wait. We do have the bullish CVDs here, right? And this one already played out. This one already played out. We now have this one here. So there is like divergences building. We are at the moment still at now support. So there's something to say about price moving up. Now, the target for the bigger bullish CVD would be the high, but in that case, I'd be looking for the box. But yeah. So I'm undecided. I wait for my plan to form. One. Interest. Still in a long. Good luck, SLB. Manage it well. Manage it well. Good job as well. In an ABC correction, can full flat complete as part of wave A? Or it's always only the... Well, an ABC can be a flat. And you can have a flat in wave A in a bigger flat, yes. So then you have a flat A, B, C, and inside A, you then have an internal A, B, C. Yes, that's possible. resistance 65, bear CVD. Yeah, so I do not look at this one, right? Because on my chart it's invalidated. We took this high. We just didn't take it on AGGR, which confuses, of course, I mean, it's just a different chart. But yeah, we have a lower high here, but a higher high on my chart. I guess we do have some bear CVD here, but it's so messy. It's so messy. Look, on the 3-min time frame, you do have bear CVD. Yeah, it's just a sideways mess. Man, what a day. Like, what day is it now? It's like, what, Thursday? So tomorrow, Friday? I mean, come on, man. Friday is gonna... must give us some volatility before the weekend. We can't go into the weekend like this and just range for another 3 days. Oh. Bank of Japan inflation rate report tomorrow might affect the dollar. Who knows these days? Yeah. Yeah, the 3-min CVD. Yeah, I see. Yeah, such a good tool, eh? CVD. Love it. Oh well. Okay, we've done the analysis. We have done some proper chatting and Q&A. The probabilities are well known, right? Weekly time frame bullish, daily bullish, 1 hour bullish, 15 minutes. We wait for a breakout of this range. We do have bullish CVDs building on the 15-minute. On the 3-minute, we have a bearish CVD. It is a big mess. It's a long sideways range. It's complex. It's annoying. And yeah, we have an 886 touch, right? We have an 886 touch here, but you do have bullish CVDs everywhere, but 3-minute bearish CVDs, and you know, it's just being patient here locally. But we are looking for wave 4, which means we are looking for a range to form and a retracement to form, but a wave 4 can be a WXY, flat, zigzag, you know, it can be anything. So let's wait and see what we get. So tonight, of course, will be a new update. See if by that time we have some new information on the chart as well. By all means, by the way, I can't just say on the 15-minute, the probabilities here are higher that this is a corrective structure, which increases probabilities to, at some point, still look for these lows to be taken. But when are we going to go to the point of control first and then move down? I would love a flat like that, A, B, C, holy moly. But yeah, local price action. It's led by the dollar index and bond yield, but the chart will tell you where it's going. We will figure it out. We will figure it out. Thanks everyone for being here. Cheers, Seriga, Hoshi, John, SLB, Armani, everyone. Thanks for hanging out. Tonight's going to be a new update. Let's see if we have some more information in the upcoming hours that will provide us with some new interesting insights. Huda Verdi, hey, that's your first comment, I think, actually. First of all, welcome. Second, thanks for saying thanks. Yanis. So, yeah, patience. See what happens locally. Read about Aladdin. Yeah, I got the tab open in my browser, so I'll have a look. Cheers, John. Thank you. One more like. Cheers, Dawa. Huda Verdi, appreciate it. Thank you, everyone. Okay, time to continue with the day. Tonight, another update, and of course, tomorrow morning, another one, and tomorrow afternoon, a new live stream. Huda Verdi, I hope you learn a lot. Make sure to check out the educational playlist on my channel. Iker, thank you as well. Cheers, everyone.